Well, Nvidia just reported earnings, and as many expected, they smashed. But in this video, we gotta talk about how much they smashed, and we gotta talk about the next chip after Blackwell. Yeah, the earnings call was left off with a cliffhanger of what's next. So let's talk about Nvidia's valuation, what was said, how this competes potentially with Tesla, and everything you got to know about the earnings call. This particular video is going to be brought to you by a new sponsor. Coinbase is now sponsoring the channel. So if you want to sign up for Coinbase, you can get $200 for signing up and creating an account. Just go to metkevin.com/Coinbase. Shout out to Coinbase for the paid partnership. Really cool, very exciting. Also looking forward to some institutional integrations in the future with real world assets and real estate, but that's all down the road. So learn more there at metkevin.com/Coinbase. So let's get into Nvidia. Okay, this was absolutely remarkable. First of all, revenue is up 3.6x. This is not percent, X year over year. Cost of revenue is only up 2.2x. That means gross profit was literally up 4x. Their net income at the company, net income was up 7.2x. Like, the absolute explosion in money that they are creating is absolutely insane. I want you to compare Nvidia to Tesla for a moment. Now keep in mind, Tesla is a manufacturer. Nvidia is just a designer. Big difference. TSM manufactures a lot of the Nvidia chips. Nvidia generated $15.7 billion in free cash flow in 3 months. That means they generated more free cash flow in literally 1 month than Tesla did in the entire year of 2023. See, in Q1, Tesla had negative $2.5 billion of free cash flow. Free cash flow 2023 was $4.3 billion. And in 2022, it was $8.5 billion. So near Tesla's peak, Nvidia still doubled Tesla's free cash flow in just 1 quarter. That took Tesla a year at peak, which is remarkable. Now again, Tesla is a manufacturer. I just want you to see, it's not to talk down on Tesla, it's just to show you the scale of the cash that Nvidia is generating. It's really hard to imagine unless you compare it to other companies. The money they're making is absolutely insane. Now you would expect that, okay, well, if we're generating that much, certainly their costs have gone up, like what they're spending on selling and general and administrative expenses. Those costs would probably skyrocket, right? No, they didn't. In fact, that's what's remarkable. Their costs on research and development were up a whole whopping 45%. Their costs on SG&A were up 15.8%. Their total OPEX was only up 39%, while their gross profit 4x'd. There is no question this company is a cash flow machine. They are cranking growth, and it is no surprise the stock is now at $1,000. Not only did they announce a 10-for-1 stock split, but they moved their dividend from 4 cents to 10 cents. That means the future share will have a 1 cent dividend. See, 10 cents divided by 10, get it? Because we're doing a 10-for-1 stock split. That means at $1,000, you get a 10-cent dividend. That'll be paid out June 28th to anybody who holds the shares as of June 11th. You'll get 10 cents on a $1,000 share, or you'll get 1 penny for 10 shares at $100 a piece, depending on obviously what Nvidia is trading for at that time. Remember, stock splits don't change any of the fundamentals for the company, but they do make the stock psychologically more affordable. A lot of people don't know about fractional trading, so oftentimes people think, oh, when a stock split is announced, that means the stock's going to go up. And oftentimes that can be true. But this video isn't about analyzing stock splits, it's about telling you about the fundies, the fundamentals. So understand Wall Street's forecast here. Wall Street is forecasting $25 of earnings per share for the year. This pretty much aligns with Q1 anyway, because if I just take their diluted EPS and multiply it by 4, so I annualize it, I get about $24 of earnings per share anyway. Now, the problem is Wall Street's forecasts for Nvidia right now are not that great. Next year out, they're only forecasting earnings to grow 24%. The year after that, 10%. The year after that, 8.8%. The year after that, they're expecting earnings to shrink by 3%. The reason is at some point the S-curve of growth slows and you hit that flatter side where you're no longer able to sell $7,000 H100 chips for $35,000 because there's a huge shortage of chips. This is why Nvidia is now getting onto a cycle of chip refreshes, which they expect will be very rapid. They expect to have a new H100 style chip basically every year. I mean, we already went from the H100 GPU to the H200, that's the Grace Hopper 100, to the Grace Hopper 200. Now we're waiting for Blackwell. Blackwell is ramping in Q2, that's now, mind you, so we're manufacturing Blackwell right now. We're expecting Blackwell to start shipping in Q3 and be installed and up and running in Q4. UBS analysts via Barron's, suggest that the Blackwell chips will actually be functional in December, a little bit later than the October previously expected, but still this year. And Jensen suggested there will be a lot of Blackwell revenue that the company will be able to recognize this year. So that's a good thing. Something else that's really good is not only do they expect to have new chips every single year, it's kind of like going from the iPhone 14 to the iPhone 15, and hopefully you get massive performance enhancement. Like, for example, Blackwell compared to H100 is supposed to be able to perform 4 times as fast in a more power efficient manner. But at some point, we're probably going to get to that point where we're like, what's the difference between the iPhone 14 and 15? Oh, not much. And I think that's what Wall Street is starting to try to snuff out. It's like, once we have this revolution done, what's the forward growth? And the average forward growth here is only about 10% on earnings per share over the next 4 years. Now, the cash flow is still massive for the company, but at the valuation, you now push the company to a 4 peg, which, since they're a designer, you could say maybe they should be worth as much as a SaaS business. Maybe. I don't know if you could do that because you don't really get recurring revenue. You have to sell that product over and over and over again. So, which maybe once you get people into the system, you could say that. But still, 4 peg, price to earnings growth, little on the pricey side for the valuation, but that has not stopped the stock from skyrocketing, again, to roughly $1,000 at the time of this recording. Although you could see it did drop after earnings right back to that 969 line. Now, I'm a big fan of drawing lines and technical analysis. Today, we traded Enphase. I sent alerts on Enphase trades. I don't guarantee you can make money with these trades. I don't promise that they're always going to be functional or that I'll always make money. But let's just say this year so far on $1 million trading account, I'm up over $800,000 in realized profits trading. Just today, I'm up $84,000, and I traded $15,000, $35,000, and $50,000. So basically, even if you added that all together, it was a rough double today, which is really, really cool. So knock on wood that continues. But my whole point of doing these exercises is to train you and teach you how to trade yourself. So you could set the lines yourself, so you can deal with your own psychology of trading. That's why we have the program called Stocks and the Psychology of Money. So if you're interested in that, send us or check us out at meetkevin.com. At meetkevin.com, you'll also see the link for our event that we're doing next month if you're interested in that. Next coupon expires on May 31st, and then our price will be going up. That also comes with lifetime access to those alerts. It's a one-time payment, course member live streams, all the lectures, and if you have questions, email us at staff@meetkevin.com. Now, something else that was really interesting about Nvidia's earnings set was their discussion on automotive. So they had a 17% jump in automotive revenues, and those automotive revenues were driven by self-driving. This is what they told us in the earnings call. They said year-on-year growth was driven by self-driving technology. And a lot of people look at Nvidia and they say, well, how is Nvidia going to have anywhere near as much success as Tesla in full self-driving technology if they don't have as much data? And so what I did is I went through the slideshow of Nvidia's webinar on artificial intelligence driving and training of artificial intelligence systems. And really what the company does, as you can see on screen here, what they basically do is they do a lot of work with simulations. So they collect a small amount of data, and then they use simulations to basically 10x the size of that data and really work out those edge case scenarios, not on the road with drivers, but in the NVIDIA software stack. And so they pitched that you could use the NVIDIA DGX Cloud, a serverless AI SaaS platform, basically, so that automotive companies can basically train their models substantially faster than competitors. And they do a lot of this training virtually. Now, I have no idea how successful that actual kind of simulation and training is, but they argue that it's actually better than real world data because you can really cycle those edge case scenarios over and over and over again. And something that I've always wondered is, what happens when you put a Tesla with a driver in a rough situation? Well, the driver just takes over. It disengages, and now you have to use the driver actually driving, and you kind of lose the car trying to learn, right? Because the driver took over. Whereas with simulations, the car could crash and then learn, oh, don't do that. Now, in theory, you could basically say that a driver takeover is kind of like a crash, but that doesn't work well either, because sometimes just to turn the system off because you want to go a different direction, you take over, and that could send some red flags to the training system. So this is interesting. I don't know how much of a competition that's going to be, but I know that their revenues are blowing up at Nvidia. And this is going to be a competitor for companies like Tesla in the future. An interesting chart here as well was that they chart that cost for training autonomous vehicles, AVs, goes up over time rapidly, while progress flattens out substantially over time. I found that to be very, very interesting. So very cool. And so they talk about edge case scenarios for finding the most critical scenarios to test. So real driving to find the edge case scenarios, and then using those edge case scenarios to run over and over simulations on. Very, very interesting. Now, there's this company called Vertiv that a lot of people have gotten very excited about. I think the ticker on that is VRT. And a lot of people are excited about investing in VRT. I'm not exposed to it. None of this is personalized financial advice, obviously. It's just education and perspective. But a lot of people are interested in this. It's a smaller company that provides liquid cooling exposure. Blackwell is a system that can be cooled either with air cooling or liquid cooling. And so a lot of people are looking at Vertiv stock as a potential here. I think the valuation, the expectations are a little high on Vertiv's growth, that they're going to grow earnings per share by 25% year over year for the next 4 years after this year. I think that's a little rich, and their margins are pretty low, net somewhere around 10 to 13%. Not anywhere close to the crazy margins that Nvidia has and the cash flow Nvidia has. I mean, frankly, if you look at the revenue that Nvidia has, we could just look at it right here. We'll go to the iPad quickly. We'll go to the income statement. Here it is. Yeah, just look at the margins here. So first of all, on gross profit, the gross profit margin at Nvidia should be like 76%, if I got that right, 78.3%. And their net income, $14.881 billion into 26 on rev, puts you at a 57% net margin. They make 5 times as much money at the bottom line than a company like Vertiv on a margin basis. So it's kind of like you made $100, you kept 57. That's amazing. So that's why Nvidia is so popular and people love it, and people are looking for the next Nvidia, but the next Nvidia might be Nvidia. Something to keep in mind is they really only grew about 5.4% between Q4 and Q1, but Q4 is usually a big quarter, so growing off of Q4 is actually pretty big. And they're forecasting 7.69% growth into the next quarter, which is pretty good. I mean, that's fantastic growth that this company is pulling off. A lot of folks say that's already priced into the stock, though. Okay, continuing on, we've got Nvidia talking about how they helped Tesla get to 35,000 H100 chips. Blackwell is in full production. They're releasing the next version of Nvidia Drive Thor, powered by Blackwell, when it comes out, which will replace Orin, and companies like BYD and Xpeng in China are expected to use that in production vehicles starting next year. So you could have full self-driving competition from Nvidia as soon as next year, assuming their simulation-based approach works versus the Tesla real driving approach. Although I think Nvidia uses a combination. It's both simulation and real driving, which Tesla does as well, but obviously there are many more Teslas on the road. Then we got some comments on how China has gotten a lot more competitive now due to the limits on Nvidia technology, and really, revenue from China has become less important for a company like Nvidia anyway. The biggest excitement obviously came not only as a result of Microsoft announcing Copilot plus PC as a way to sort of reinvigorate PC sales, because Nvidia also saw GPU sales going down for desktop workstations. That's a fancy way of basically saying, hey, yo, there are more layoffs in finance and tech, so less people are buying computers. Microsoft plus Copilot might sort of accelerate some of that RTX adoption again and help Nvidia get out of that PC recession, so to speak. But really, this has become a fraction of their income anyway, and it's really these server chips that are moving big. Now, something else that I was worried about was the inventory buildup for Nvidia and if they would take any kind of inventory write-down. I did not see anything to indicate that there was an inventory write-down on the value of H100s. So I think that fear is reasonably allayed for now, unless I've missed it. And their inventory did actually grow by 11% year over year. I'm sorry, this is quarter over quarter. Yeah, quarter over quarter. Inventory grew 11%. So I'm not really seeing any kind of inventory markdowns or write-downs on Nvidia due to, fear over more price competition for the H100s. I do see price reductions on companies like ASA that sell these chips, or on eBay. You can get these chips for like 28 grand now. Still a significant premium over the 7K that they should probably be retailing for. But they're getting it because there is demand for them. And why Amazon didn't want to buy more H100s and just wait for the Blackwell does somewhat signal a little bit of a slowdown in AI demand, but not from a company like Snowflake. Snowflake had 128% net revenue retention, 485 customers with 12-month revenue over $1 million each. And quite frankly, the numbers were really impressive at Snowflake too. I posted them over here. You can see them at ehack.com. 34% growth on gross profit, 21% growth on sales and marketing. So you had gross profit grow more than sales and marketing. And they are still losing a lot of money. And a company like Snowflake was the sort of big data before AI, I wrote. I believe that, obviously. They worked with big data. That's always what they've been about. And they beat forecasts, so they did well here. Stock's only up about 3.8% in afters. But these are the companies that are really going to be operating and using the server solutions that NVIDIA provides. NVIDIA suggests that if you spend $1 on an NVIDIA chip, you should be able to earn about $7 in API revenue over the next 4 years. I think that's a little bit of a lofty expectation, especially since they gave a shout out to Stable Diffusion. The company that runs Stable Diffusion is called Stability AI. And I actually wrote a piece on ehack.com about how Stability AI is not actually stable per the information. They raised $101 million at a $1 billion valuation in 2022. They did make some money, but then all of a sudden the CEO resigned. Now the 180-person company might be sold. They have $100 million in bills to pay, and they had a net loss of $30 million in Q1, and they might be out of cash. So in other words, the company that created Stable Diffusion, which is known for image generation, I put a little explanation here. I'll try to give a very brief explanation of how Stable Diffusion works. But the point is, the company that created this might be going bankrupt. Now, that's not to say that the technology will go away, but it just shows the challenges of actually earning revenue with AI versus how easy it is to sell AI GPUs, frankly, to companies that could use those AI GPUs. Stable Diffusion, quickly, basically what it does, and this is very, very annoying and complicated to explain, and I'm probably going to screw it up, but I'm going to try to explain it like I'm explaining it to a 5-year-old. It takes a picture of a cat, let's say, or a picture of something. We know it's a cat, and then it adds noise over and over and over again. And it basically makes the picture very, very, very noisy. And the idea is when you in the future type in, hey, give me a picture of a cat, it'll first generate a picture of, okay, a cat should have a noise pattern that looks like this. Now let's undo the noise and reverse the process to try to come up with a picture of what you've asked for. So it's really weird. I'm not going to go into that any further, but this is just an example of how like an AI software company that's basically coding and encoding AI images using AI server stacks is actually losing money despite having a pretty novel concept. So hence why I think, there's some hopium built into those sort of AI software revenues. Now, would I probably rather invest in Nvidia than a software company like Stable Diffusion? Almost certainly. Am I invested in Nvidia right now? Yes, I have exposure to Nvidia, and I'm not short Nvidia. I had no options. I had no plays on this earnings call, but I am long Nvidia. And that reminds me, I gotta thank, again, our sponsor for this video, Coinbase, metkevin.com/Coinbase to learn more about Coinbase, and you can get up to $200 when you sign up for Coinbase. So if you haven't done that yet, check them out, metkevin.com/Coinbase. I'll link it down below as well. And then, of course, check out that Stocks and Psych group for my trade alerts so that you could see how I trade. And the goal is to make money. Of course, it is not a guarantee. It is to share perspective, and past results do not guarantee future results. So let's now just sort of look on a TA basis here. First of all, is it bullish that the company is doing a stock split? Yes. Second of all, where are we sitting on the fibs? Well, we're about to move up on the fibs. We're about to break through 1,000, so it's going to put us here if we open up here tomorrow. It is possible that we could get to the fib extension level of $1,116. So if you're looking to go YOLO on this, it is possible that $1,100 calls could be interesting, although it's also possible that you get a sell down on Nvidia tomorrow as people sort of digest what we've heard in the earnings call and in the earnings reports. So this is an overview on this company and what just happened with Nvidia, what just happened with their earnings, and some things to consider. So these are my perspectives. Personally, I probably won't play any kind of longer term YOLOs here. I'm totally willing to hold the stock though. I don't think I'll trim my position on the stock, but if I did, it would only be, to keep it, to like buy another opportunity, I thought, or to keep it in balance with a diversified portfolio. You don't want it to get too overweight since obviously it's going up. But other than that, I don't know that there's much of a play for me here. What I might do is tomorrow in trading, I might be interested in trading some of the derivatives, which are going to be basically stocks that move as a reaction to this. Like, for example, ARM or Super Microcomputer, or maybe even Vertiv, but only as trades. I don't anticipate as longs. I don't really like ARM from a fundamental basis. And I don't really care for the manufacturing companies like Vertiv and Supermicro. I much prefer just Nvidia directly over those. But that's my personal opinion. That doesn't make them bad companies. That's just my opinion. Anyway, hopefully this is useful to you. If it is, consider subscribing to the channel. Shout out again to Coinbase. Thank you for being a paid partner of the channel. Check out the Stocks and Psych group for those courses on building your wealth and get in before that coupon expires. You do have until next Friday, though, so you've got a little bit of time. So if you have any questions or you want to bundle up, like with our event in Vegas next month, or you want to bundle up for other reasons with other courses, check them out over at meetkevin.com. Shout out to those of you who joined within the last bit here. Andrew, David, Jay, Devin, Luis, Marcos. Thank you so much for joining just within the last hour-ish here. Really appreciate you. There's some others of you as well. I can't pronounce all these names, sorry. But anyway, love y'all. I gotta go. Thank you so much. And now we're gonna play my outro music.
Go yourself. Is that clear?
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. This line's pretty important if you're watching Bitcoin. You better have it drawn. It's the $69,000 line. We can't keep going back to it. And obviously way up over the last few weeks here. I'm surprised coin isn't up more than it is. and then you've got Ethereum here on enthusiasm over the potential Ethereum ETF, sitting at that 3764 line, also a pretty critical level. Thanks, y'all. We'll see you in the next one. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.